For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and are not making any specific trade recommendations. And also, please be aware that your risk in trading options is substantial. Please make sure you are aware of all your risks prior to placing any trades. Also note that this presentation may contain hypothetical computer-simulated trades into results. They would be believed to be as accurately represented as possible. Keep in mind, live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Locke in Your Success LLC. And myself and my team of mentors are here to help you win in the markets and in life as well. And today, I am here to take you into the realm of high probability options trading. This is where we utilize options strategies to make money from the passage of time rather than or in addition to price movement. This means that we can often make money whether the price goes up, down, or sideways. And one of the things I love about this type of trading is if you do it properly, it can be very simple and very profitable at the same time. And as you will see in this example that we're going to be showing you today. So the complex options strategy that I'd love to share with you today is the bull trade. This is an extremely simple and easy to manage strategy, and it's traded on the Russell 2000. The strategy itself is going to take advantage of more bullish and neutral market conditions, although we do often win in sideways markets as well as sometimes bearish markets. So the way this strategy is traded, I'm going to show you the rules right here because they're really simple. On the Wednesday closest to 65 days to expiration, in our examples, we use the monthly cycle. We're going to enter a 10-point wing bullish vertical on the Russell 2000 that gets a credit of more than $2.50 per contract. And then from there, we're going to check this once a day if the market's down. If the market's up, we don't really need to check it. Even if it's down, unless it's down a lot, we usually don't need to check it. So it's very easy, very simple to manage. And we're going to exit under two conditions. Number one, if the position drawdown is greater than the credit received, or $2.50 per contract in this case, or if the next monthly trading cycle or monthly companion cycle, if you're trading in the weeklies, is 65 days to expiration, and we're just going to rinse and repeat, so to speak. The bull trade is going to require, if you're going to trade on the Russell 2000, it's going to require a minimum of $750 total capital to do the trade. It'll be $75 if you do it on the IWM. Your profit target, well, we don't have a profit target, but the most you could get is maximum credit. Our exit loss trigger is going to be 33% of our planned capital, or in this case, $250 per contract. Our example size is going to be 10 contracts, which is going to create a planned capital of $7,500 planned capital. And our exit loss trigger is going to be 33% as well, or $2,500 on 10 contracts. So why don't we take a look at this position? Before we do, I'd like to remind you to like and share our videos. It helps us to continue to bring this wonderful content to you. And we also encourage you to comment on our videos and give suggestions. We love to hear from you. And I answer all comments, questions, and so forth personally. All right, so what I'm going to do with this strategy on this episode of The Winning Trade is I'm going to simply take you through 3 months in succession. We do this a lot with the Super Bull trade. We do it with the bull as well. Most of the time, this strategy does come out profitable from month to month. Of course, we do have our losing scenarios. We also have challenges sometimes with entry, which I'm going to show you one today. The way this strategy works is we're going to come in 65 days to expiration. In this case here, we're looking at the June 21st, 2024 expiration at 65 days to expiration. It's April 17th, 2024. I will take you through this cycle, the July cycle, and the August cycle, so you get a chance to see what's going on. The way the strategy is traded is there are no adjustments. We wait and we see if we hit our exit loss trigger. If we hit our exit loss trigger, we leave. Otherwise, we stay in until the next trade gets 65 days to expiration. It's extremely simple. Realistically, You enter the trade, you have to make sure you set it up right. You're going to monitor this if the market's down substantially to see if we're going to get out due to our exit loss trigger. Other than that, we just wait until the time's up. Now, sometimes people, especially those who try to trade flatter positions like broken wing butterflies or condors, and try to hold them neutral delta. Everything has advantages and disadvantages. We have those strategies too. I can tell you that this strategy win rate is just as high as any broken wing butterfly strategy that you might have. And I can also tell you it's pretty much just as profitable as well. And it's extremely simple and easy to manage. So what I'm going to do from here is normally I'm going to come in and I'm going to try and do 10 contracts with 10-point wings, and I'm going to try and get $2,500 credit. One of the unusual things that's happening this cycle, and it does happen from time to time, is we don't have the strikes that give us that. Normally those options are there. Today they're not. Now I could go into another cycle. That's perfectly fine. I could hit a weekly cycle at 65 days expiration in a week or two. Or I could enter a little bit late, particularly if the market's down. I don't really mind doing that. But for the purposes of keeping things consistent in the examples in the consistent cycle, what I'm going to do here is I'm just going to go to my lowest strikes that are available at 10-point strikes. And these strikes happen to give me a credit of, let's see, $3,280, meaning my capital requirement's a little bit lower. So it's only about $6,700. It gives me a little bit more of a chance to make more money. I would change my exit loss trigger, by the way, if I did this to say 30, we'll see, I got 3,300 in credit, so it'd be about 3,300, which means I'd have a stop out point around here. We encourage everybody to trade to the size that they're willing to lose. If this is too much money for you with the oddball strikes that we're using at this time, you could cut your contracts couple size and make that $2,500 and use that $2,500 number. But we're just going to let this go with 10 contracts, and we're going to let it roll. So basically here, we do nothing in this trade until our July cycle is 65 days to expiration, or we hit our exit loss trigger. We'll just run this week to week. We'll see what it looks like as we go along. So here's 1 week. Take a look at the price chart here. We actually happened to hit a bottom, which is pretty nice. One of the ways we know we hit a bottom is we didn't have strikes available, and that being the case, that'll tell us basically the implied volatility in the market. When they made the strike series, never thought the market would get that far. So a lot of times that tends to be a very good bullish trade in itself. So we happen to have a pretty good entry here. Let's go to another week. Now this trade is not going to last 65 days. It's only going to last till the next cycle, 65 days. You can see that July is coming up at 79 now. It's going to be a couple more weeks. They run it on average around 30 days. If I go to the following week here, we look like this. We're up $2,180 and everything's fine. And then I'm going to hit ignore trades, and I'm going to go to the following week, and that's going to be the end of the trade. So let's quickly go here. And at this point, our July cycle is now 65 days to expiration. We had been in the trade 28 days because we started at 65. We're now at 37. We have been in the trade 28 days. We have a profit of $2,830 on a planned capital number of $7,500. And it's time to exit once again because July is 65 days to expiration. So we're going to take this trade off, and we're going to do the same process for July. This time, since the market hasn't been down like crazy before entry, we're going to be able to get closer to our $2,500 target. So when I come in here at this point, I take a look at my July option cycles, and usually this comes in right around 30 delta. Sometimes it's 32 or 35, sometimes it's 28 or 26. It depends on the implied volatility environment and what the vertical skew curve is like. But in generally, it's right around 30. In this case here, if I pick my 30.65 delta and the next down 10-point strike, that gives me a credit of 2780. That's fine. I could check a lower strike if I wanted to. Usually in my examples, if that is too close to $2,500, you might say, well, I might not get it executed at that. So when we do the examples, we do them at prices. We make sure we get executed at a price where we're definitely going to get that $2,500 credit. And when we do that, this is what we have here. The same scenario comes into play. We are on our July monthly cycle. We're going to exit this when our August monthly cycle is 65 days to expiration. Until then, we're just going to stay in the trade unless we hit our exit loss trigger, which is going to be about $2,500. And we'll pull that in here. That's going to come into play at around Russell 2000. So basically, we really don't need to watch this position at all unless the Russell gets down in that area. One of the things I get questions about sometimes is, hey, like that last trade was closer to the money. Does that mean it's got less probability of winning? And the answer is no. If you use the typical options theory that, hey, your 30 delta, you have a 70% chance of making money, or your 10 delta, you have a 90% chance of making money. That statistic isn't not actually true. This trade at a 30 delta is going to, if you use a 1-to-1 risk reward on the trade, is going to have virtually an identical win rate as a trade that's done at 10 delta with the same type of rules, and it's also going to have the same win rate as a trade that's literally done at the money with 2110. If you use that 1-to-1 ratio, it doesn't really matter. You may vary from trade to trade, but overall the results are generally the same. So that's a lot of people get hung up on choosing strikes, but it's really not that important, at least in this type of trade. So anyway, here is our entry. Let's do the same thing. Let's go week to week. Week 1, the market's down a little bit. We're drawn down, but not a big deal. Week 2, we're drawn down a little more. We're down at like 15, 20. So we entered this near the top of the market. If you're just doing this at a random time, sometimes you're going to hit some really good entry points. Sometimes you're going to hit some not so good entry points. This one is a not so good entry point. When we get to stage 4, stage 5 within our Trader Success Blueprint, we talk about how to eliminate this issue. Let's just go to the next week. So now we're down 1170. This is perfectly fine. The following week is going to be our exit. So let's take a look at this here. As of the 12th, we are now 65 days to expiration. And this trade happened to lose. That does happen from time to time, right? We have these losing scenarios within our trading strategies. We're down $1,400. Our next cycle is 56 days to expiration. So what's going to happen is we're going to go ahead and we're going to close out that. If you take a look at the price move that happened, we had a entry virtually at the top. We had a very significant down move. And, at this point here, it's time to exit. So we're going to close this out. We are going to enter our August trade now, because our August is 65 days to expiration. Now that we've had a down move, it's much less likely that we're going to have a problem with the trade. So let's take this one and we'll run this one week to week. I'm going to go to the 20th. Week 1, we're drawn down about 820, so not that big of a deal. Week 2, we're down about 920. If we take a look at what our price chart's doing, it's holding down at this lower level. If we take a look at week 3, we're back close to break even. And if we take a look at week 4, again, still at break even. And then if we take a look at week 5, we end up at our exit date. So it's Wednesday, July 17th. And our cycle for September is now 65 days to expiration. So we're going to take this trade and we're going to close this trade at a profit of about $2,530. And then from there, we're going to make an entry for our following cycle, which is going to look like this. So let me just hit the trade. I'm going to come in here. We're going to, in this case here, we're at the 26 delta, 24 delta. If we do that, we get our after execution credit of over $2,500. So we're good to go. We're going to have a stop out point on this somewhere around 21.21. And unless we get down in that area, nothing to do here until our October cycle is 65 days to expiration. Okay, so when we take a look at our results, we have a win of 37.5%, we have a loss of 19.2%, and we have another win of 33.5% for a total gain of 51.8% of our planned capital in approximately 90 days. And within that period, we've only made a total of 6 very simple trade executions, 3 entries, and 3 exits. And that is why I love the simple, highly profitable bull. This episode's winning trade. If you like what you see, I invite you to come on over to lockeinyoursuccess.com. That's LOCKE inyoursuccess.com, and discover how you too can follow along with the bull trade and 11 other powerful trading strategies as they unfold during our weekly options trading for income webinars. Also, make sure you check out thewinningtrade.com. That's thewinningtrade.com, where you can learn about upcoming winning trade presentations, explore past winning trades, and receive free access to bonus material. Also, while you're there, make sure you check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see on the next winning trade, please make sure you put that in the comments below. I answer all comments and questions personally. Thank you for joining me. I look forward to seeing you on the next winning trade.